Today's presentation is Part 1, Onboarding the Customer. Part 2, Digital Order to Cash, a Roadmap to Collections Automation, Keeping the Customer and Maximizing Cash Flow, will be presented on April 14th at 10 a.m. Central Standard Time. The final part, Part 3, Digital Order to Cash, a Roadmap to Cash Application Automation, Happy Customers, Happy Shareholders, will be presented on May 19th. We hope you can join us for the entire series. If you did not yet register for Part 2 and Part 3, a registration link was included in your registration email for today's webinar. The registration link is also located on the nacmconnect.org calendar. My name is Linda Herbst, Senior Marketing Administrator at NACM Connect. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You are listening in using your computer speaker system by default. If you would prefer to join over the phone, just select telephone in the audio pane, and the dial-in information will be displayed. You will have the opportunity to submit questions to today's presenters by typing your questions into the questions pane of the control panel. You may type your questions at any time during the presentation. Questions will be answered at the end of today's presentation. I would now like to introduce 𝗤𝗵𝗲𝗰𝗸. 𝗤𝗵𝗲𝗰𝗸 is the founder and CEO of 𝗤𝗵𝗲𝗰𝗲 Corporation. She is an award-winning serial technology entrepreneur with extensive experience in the fields of artificial intelligence, data analytics, and automation for enterprise financial services. I'm also introducing 𝗵𝗲 Cain. 𝗵𝗲 is the Director of Digital Order to Cash Solutions at 𝗤𝗵𝗲𝗰𝗲. He has over 16 years of experience in finance and order to cash transformation, as well as having led the digital solutions deployment to large strategic accounts. Today's presentation handouts will be emailed to all registrants along with a link to a recording of today's webinar. Without further ado, I will now hand the presentation to 𝗤𝗵𝗲𝗰𝗸.
Thank you, Linda. Good morning, everyone. Thank you for joining us today for this webinar, Digital Order to Cash, a Roadmap to Credit Automation, Onboarding the Customer. I'm very happy to be your presenter this morning. I'm 𝗤𝗵𝗲𝗰𝗸, founder, CEO of 𝗖𝗵𝗲𝗲, and I've spent the last 20 years of my life primarily on order to cash, automation, analytics, and bringing AI to this particular process. So for the next 1 hour, we'll be happy to share with you the digital order to cash roadmap for credit automation. Again, joining here with me is 𝗵𝗲. So before I jump into the presentation, 𝗵𝗲, I'll pass this over, for a brief introduction, and then I will continue the conversation. Over to you, 𝗵𝗲.
Hello, everyone. 𝗵𝗲 Cain. As mentioned, I have over 16 years experience in the order to cash space. I've handled delivery as a consultant. I've been on the implementation side, and really, whenever I go into situations with clients, I always want to look at it through their eyes. What's the challenges that they see, and then how can we complement that with solutions that we offer so that the end result is what they're looking for. So I'm excited to walk through today to show how we can present the order to cash credit automation.
Thank you, 𝗵𝗲. So before we dive into the presentation, a quick introduction about our company, 𝗖𝗵𝗲𝗰𝗲. 𝗖𝗵𝗲𝗰𝗲 is a digital order to cash platform provider. We have delivered our solution to a number of companies around the world, global companies in multiple different industries. And our product primarily, covers the entire order to cash process. It brings in analytics, automation, and artificial intelligence to take the entire order to cash process to the digital age. We have 6 different modules: credit management automation, receivables automation, collections automation, deductions automation, cash application automation, and a customer self-service EIPP portal. We also have, deep analytics and visual insights dashboards, that we deliver across the entire process. And our system is a cloud-based system, and it connects to, leading ERP systems like SAP, Oracle, PeopleSoft, and many other systems within the enterprise. Also with external third-party credit bureaus and banks and other external systems. We also have, digital credit application solution called 𝗔𝗂𝘀𝗀𝗲𝗏.com, and it's a simple online solution where you can, automate or digitize your credit application form. So that's a little bit about 𝗖𝗵𝗲𝗀. And again, coming to today's session is primarily focused around digital credit, digital order to cash. That's the primary session. And so let's get started. So first and foremost, digital transformation is the next step in business transformation. Why is it important? Because it provides opportunities for innovation, scalability, and agility. It helps your business to grow to the next level. And digital, as you see, we are in the 4th industrial age, and everyone is talking digital, and business models are changing to digital, and business operations are changing to digital. And digital is in the core, front, and center of all priorities within most organizations. So today we will be discussing, about 4 different subtopics. First and foremost, the why and how of digital. Secondly, the order management and credit risk. How the digital customer experience is the new wave, and why credit process is an important process to look at. The third subtopic is around automating the credit process, and this is where I'll spend bulk of my time, walking you through the 10 digital essentials of the credit process. And then from there, we'll dive into starting your digital credit application automation project. 𝗵𝗲𝗀 will walk us through, what it means starting your project, and also he'll share with you a case study of, of a company that have transformed their credit process to digital credit process. And there's something from that we can all learn and look into how they have, transformed from traditional manual process over to a digital process. So these are the things that we'll be covering. So with this, let me dive right into the why and how of digital. I'm sure you have seen, several surveys out there coming from, leading audit firms like Deloitte to KPMG to PwC and others, as well as several analyst firms that are saying that digital transformation, is a wave right now, and digital transformation has become an acute, universal prerequisite for every business. Every company at a C-suite level is looking at how do you transform, companies to digital. And in the survey conducted by Dell Technologies in 2019, about 78% of them believe that digital transformation should be more widespread within their organization, meaning every enterprise operation needs to become digital. 51% still believe that they have a struggle, with the changing customer demands, within the next 5 years. Most customers are changing to digital. People are shopping online, and the customer expectation of interaction and experience is going digital. So everyone is experiencing that both in the front office as well as in the back office. However, within most of the enterprises, 1 in 3 still fear that they don't understand digital, and they still fear that they will be left behind. Look at many successful digital companies, like like an Uber, for example, like a Netflix, where they have completely changed the landscape and the industry. So most CEOs and CFOs, are extremely worried about digital changes and how their company or however your company needs to be adopting to the new digital world. So with that, let's look at, first and foremost, how are companies applying digital within the enterprise. Customer is king, and first and foremost, digital is applied to the customer experience. Digital is the new wave of engaging the customers. The speed at which you can interact with the customer and the speed at which the customer, can purchase goods, of your company is most important to grow, the business, business revenues. Empowering business to serve more customers in a better way, onboarding is to be made easier. So this is where, again, from a business growth perspective, some of the key considerations of digital is how do you put digital technology in place where your customers are happy customers, they will come back and they will buy more, from your company. At the same time, from a company perspective, that you're able to minimize the risk, you manage and control, the customer onboarding, and that, you're able to build a profitable business, without a whole lot of, bad debt. So digital can help in multiple different ways, in growing the business while still having a very efficient operations. One of the key things that, companies are looking at is how do you optimize, the operational cost in the back office? How can you have, the same, number of people, handle more operations, more, business growth, more volume, and how can technology, cover, some of the aspects of automating the repetitive tasks and give meaningful interpretation of the data. So with that, what does it mean for credit? And where can digital technologies apply for credit? So again, coming to the credit side of the business, all the way from credit application to doing reference checks, to doing, credit scoring, taking information from multiple credit bureaus, to looking at your portfolio in a meaningful way. All of those are opportunities. The entire process, right from application to all the way until the approval process, there is an opportunity to apply digital and see how this entire process can be automated and accelerated. And this is where bulk of today's time, we will share with you what are these essentials of the digital credit and how these different sub-processes can be automated with credit. Now, a lot of credit departments, currently are spending, a lot of time on more of administrative activities on the credit side of the business. For example, taking a credit application form, verifying the application form manually, or passing this around over email and fax to different people within the organization. Also doing credit scoring on an Excel spreadsheets, sharing this over email with multiple different people for approvals. All of that is primarily current process state in many companies, and there is a lot of administrative activity that is centered around that. So most credit staff wonder, hey, will automation take away my job, or will automation transform, what activities that I do. And one of the key things I would like to highlight is the times are changing, which means that there is automation coming your way, but at the same time this automation can be used by you to transform yourself from administration type of a role into more of a strategic role where you are able to see a lot more insights from the credit applications, from your customer portfolio, from your credit portfolio, and you're able to operate this at a much higher level and contribute to your organization. So digital is inevitable. Understanding digital and how you can use this as a tool and how you can take yourself to the next stage is the most important aspect. And the purpose of today's presentation is to again bring you that digital technologies knowledge and the digital systems knowledge to see how you can leverage this particular tool and make this as your advantage. So with that, let's dive right into what's happening on the customer side, what's happening on the business side, credit order management and credit risk. Digital technology is drastically altering the balance of power between customers and companies. While customers gain the power of information and choice, digital technology dramatically improves the economics of business. These economics are the primary drivers of digital transformation for many businesses. The underlying word here is economics of business. The world is changing and digital has the power to bring in a lot more customers to your company and a lot more business growth to your company. So how can back office scale to that sort of economics? And that seems to be the fundamental drivers in most of the CFO and the finance transformation projects. And this is where, coming to the credit, first and foremost, digital success is customer success. If you have a successful digital application on the front office side, whether it is your e-commerce or whether it is, on the customer acquisitions inside of the business, onboarding the customer and how you have a customer satisfaction, higher satisfaction score directly translates to, improvement of the overall, digital success, of the project. So with this, from a, what are some of the factors, that are influencing the credit, digital credit? So first and foremost, automation has been simplified tremendously with cloud applications. No longer do you need to go to IT to implement a huge project. To first of all, like a typical ERP project where you have to define a big process, you have to bring in a lot of stakeholders into the system, you have to put a huge budget and take it forward. That was, the decade of ERPs. But in today's world, with cloud and with SaaS solutions out there, business has changed. You can simply subscribe, to online software as a service. You can start with your credit application. You can, simply start, configuring all of these different aspects of the credit application process and simply go digital. So the whole aspect of, transforming to digital has become a lot more simpler. And this is where I think it will be very helpful for you to understand how do you take this forward and how do you, minimize, the inertia of going to digital. So with this, let's look at, what is the motivation of, going digital on the credit. So first and foremost, many companies, are having the customer first attitude. So doing better with less is important, meaning, having a optimized credit department and how you can handle more and more credit applications, with the rising, volume of incoming credit applications. That's important. Customers having self-service capabilities is important. Most customers do not want to, call up and wait for somebody to answer. They want instant responses. So a lot of self-service capabilities, real-time access, all of that are important, for the customers. For the digital organizations, who have customer first, obviously there is a lot of data of the customer that you can use this data to shape up your business strategies, where to shape up your credit risk, to shape up your customer acquisition strategies on the sales side, and credit can partner better with the sales if you're able to focus less on administrative activities and more on the data that you're receiving on the credit process. So with this, let me dive right into the essentials of the digital credit process. So automating the credit process, 10 digital essentials. So, first and foremost, before we dive into that, a lot of, time over the last few years in the industry has been spent on trying to understand digital, but not many companies have gone digital, or not many credit departments have gone digital. And, but, it is time right now to move the things forward and see how you can leverage digital and how you can start, taking, one step at a time in your digital process. So with that, if you have to move forward with the digital credit automation, what are certain things that you need to take forward? So today we're going to talk about, 10 essential elements, and you can take each of these elements one step at a time, or you can take all the 10 elements, including the credit process, to to automate your entire credit process end to end. So the 10 elements we're going to talk about are right here on the screen. The first is the online credit applications. The next is the digital signatures, reference checks, the external credit bureau integrations, custom scoring, rules-based credit application, limits granting, workflow approvals, portfolio analysis, productivity bots, a little bit on the AI side of the business, and also on the digital assistants, also on the AI side of the business. So I'm going to walk you through all of these 10 different elements. And, at the end of the session, we'll be happy to take, questions on, any of these 10 elements. So first and foremost, let's look at credit applications. Today, in many, many companies, still the credit application form is either paper or a PDF form. What happens with the PDF form is, customer, again, fills that particular form, and someone has to look at that form and make sure that all the mandatory fields are filled up, and they have to, again, fax it or email it, to different people within the organization. Online credit application forms, this is the first element of digital credit application, digital credit automation. So this is where, if you have an online form right there on your e-commerce site, or right in your Salesforce, .com, where your sales team is able to simply share this online form with the customer, that is the first step of efficiency that you will be able to gain. Now, what does it mean to have a digital credit application form? How is this different from a PDF file? A digital credit application form is a form, first of all, which can do self-verification. It can guide the customer to make sure that they are able to fill the mandatory fields within the credit application form. That you will be able to set the terms and conditions. You will be able to have the right checkoff by the user or by the submitter on the credit terms and conditions. The application, will make sure that the file attachments are, done by the submitter. You can simply mandate or, configure your credit application form to make sure that, the attachments are defined. You can have a financial statements, for example, or any supporting documentation or credit certificates or tax certificates. Any of those attachments you can mandate the form to make sure that it is guiding the user to attach all of that. You can configure a personal guarantee form, for example, a job sheet form. All of this can go right into the digital credit application form. So what happens with this is when the submitter fills the application form, the system is automatically checking to make sure that all of the mandatory fields are filled, the attachments are done, the personal guarantee form is filled up, the job sheet form is filled up, the terms are checked off. All of these automatic checks are already happening with the credit application form. And that's the power of efficiency that the digital credit application form can bring in for you. And this is very different from simply having a PDF form out there. So this is the first and fundamental. So, a lot of companies, take, a tremendous amount of time putting together a huge project on, credit application automation. But today there are many solutions out there, including the ones that we are offering out there, where you can simply go onto the website, configure your own form, and start receiving your credit applications digitally. With just a matter of minutes, you can configure the form for you and then get this going in the right direction. So first and foremost, get your credit application form digital. That's the first element. The second is these forms, one of the most important aspects of digital credit forms are digital signatures. Digital signatures today, are, very much accepted, both in the consumer environment as well as on the business credit side of the business. According to the Electronic Signature Act, all of these are today in action in many places. Both on the banking side of the business as well as on the business financial, customer financial centers as well. And I'm sure most of you have experience using DocuSign or Right Signature or Sign 1 2 3, Easy Sign. All of those different e-signature or digital signature products out there. Digital credit also, has digital signatures as one of the key components. And this is where your form should be able to take digital signatures. The form should not only be able to take signature from one signatory, you should make sure that, this is now being able to get routed to multiple signatories, for example. Or if it's a mobile application, it's able to, send it to, other signatories, very easily. Also, the digital signatures have an audit trail. You do get a timestamp of, when somebody is signing and, the audit trail of if there are any changes and all of that. So digital signatures, all in all, is a huge time saver. Because it helps your customers fill in the forms very easily as well as get signatures, very easily and apply for credit in a very easy manner. So, again, digital application forms coupled with digital signatures improve tremendous amount of efficiencies. Now, once the form is submitted, The next aspect that happens is reference checks. And today, in most companies, a good chunk of credit reps activities, focus around how do I follow up with trade references? How do I follow up with bank references? If somebody is not responding, keeping track of, how many times you're following up, or, how many times you're looking at your email or your fax, all of that, consumes a whole lot of activities. Where the power of digital comes in is, the digital can automatically start, sending reminders, to your trade references or bank references. And it can present forms to them to, simply take the reference information and get it back to you. And that's a huge time saver for many organizations. And again, today, some of the leading digital companies are using digital reference checks to automate this particular process and get the time savings. So I'd absolutely encourage you to see more into how can you enable digital reference checks. The fourth element is bringing in that information from third-party credit bureaus. We have third-party credit reports, coming in, for example, with NACM NTCR reports, or a Dun & Bradstreet reports, or Experian reports, or Credit Safe, and a number of different credit organizations out there. So several times, this information is coming either in their systems that you subscribe, or it's coming in email formats that you'll have to share with different people within the organization. And one of the most important aspects of the digital credit solution is the ability to, integrate right into these, external party systems and make that available to you, right in your, credit inbox. And that's a very important piece of information. So that way you have all of these different pieces at one place that you are able to see, whether it is a DNB report or an NTCR report or an Experian report, all on one screen and all at a single place. And all of the pieces of information you will be able to use for credit scoring in a meaningful manner. So today, if you look at many of these organizations, they're all, exposing the credit data set through what we call as APIs. APIs are a very easy way for us to consume that particular data and bring to your credit workbench in a very, very easy manner. And many companies today are looking at leveraging, those aspects of the data sets. The fifth element, what we have here is, credit scoring. A scoring model is the most important aspect of automating the credit process. In many companies today, the scoring model exists on Excel spreadsheets, and you can have multiple versions of that, lying around, as well as for when you have multiple product lines or when you have multiple business units, and your credit scoring models are different for different product lines, it becomes very, very cumbersome to maintain those Excel spreadsheets. Again, there's a big amount of time sink that happens when you have to score each of these credit applications using your Excel credit scoring module and review with few other people, etc. So one of the big aspects of digital credit automation is how do you automate that piece? And a good digital credit automation system, can have what we call as a credit scoring automation, where simply you're able to put your Excel scoring models into the system, and the system can automate scoring of that particular application. Automating credit scoring has many, many advantages. First and foremost, it provides you consistency on the credit approval process. It provides control on how you are granting credit limits. So consistency and control in these two can be maintained well if you are able to automate the credit scoring model. So again, defining credit scoring models with both internal as well as external data. What I mean by that is internal data is, the payment experiences, of the customer with your organization. That's the most important aspect, looking at a, customer payment history, with your organization, for example. Couple that with external score, which is a DNB or Experian or other scores, and building a model around that, is a typical typical way companies put together the scoring models. All of this can be automated in a good digital credit management solution, and this is again one of the core elements of automation that you need to look at. The sixth element is sixth element is rules-based credit limit granting. Once the score is calculated out of your scoring model, I think it's really important to make sure that you're able to classify the incoming customer or a prospect into different levels of risks. It's a high or medium or low risk. And have a good definition of that. What happens with this is obviously, there's a huge productivity driver in terms of, making sure that the incoming, prospect is, classified, properly with the right, the risk classification. It becomes easy to, figure out what kind of credit limits that you want to set for different classification of the customers. You can create consistent credit limit policies and make sure that the treatment is consistent across each of these different classifications. So especially with a high volume credit applications coming in. Rules-based credit limit granting provides you a consistent treatment and helps your customer understand your decisions in a proper way, and it provides better customer satisfaction as you move forward with the customer. So once you classify the customer, the next level of automation is around approvals and how you can set the workflows for approvals. Today in most companies, after the credit scoring is done and the classification of a customer is done, that particular information goes to different people in the organization over email, and the approvals are sought more in the emails. So this is where, with a digital credit application form, you are now, moving away from an email-based approvals and more from a digital credit system-based approval, where automatically within the system, it is now going to route to different people based on the organization authority. For example, if you have, a credit application form, that is low risk, and you want to take a manager level approval, you just go ahead and set that up in the system, and the system automatically takes you to the manager for approval. If it is a high risk and you still want to have some director levels looking at this, you can also set it up, and the system itself will do automatic routing for you. And there's a good part of digital credit automation system that you are able to set up the workflows for the approvals. So the next portion of the digital credit automation essentials is the periodic portfolio analysis. Your customers, on an annual basis or any periodic basis, if you'd like to do the portfolio analysis. Today, in most companies, that's a tremendous amount of activity, especially when your customer volume is pretty high. For example, last week, I was talking to a company where their customer volumes are, few, tens of thousands, and doing an annual periodical review of the credit process, combining both internal and external data. It's a huge process, and a good digital credit application system will be able to, again, alert you when the next credit review is due, and it will be able to automatically run the credit application for this existing customer, through what we call as an automated review, and at least alert you on, are there any changes to this particular account? Are there issues of, bankruptcy alerts? Are there any other, portfolio alerts, that you're receiving on this particular customer, and accordingly help you, take it to a whole new level. So periodic review, especially if you're having, large volume of applications and a large number of customers, periodic review is one of the most important element of credit automation. So the next I'd like to cover is on productivity bots. I know there's a lot of talk around AI and what AI can do. Today, software bots are able to, do some of the repetitive activities. For example, if in your credit process, if you have to do a business license check and you have to go to a state government website and pull out a license information, and if you have to do that, for every application, that is a very time-consuming process. So today, there are bots in good digital credit application solutions where simply with a click of button, the bot is able to go log into, let's say, a California government site, verify the business license, and come back and, let you know, here is what the license looks like. Having some of these bots, again, bring in a good amount of productivity. And this is the new direction that digital credit is taking, having more and more bots that can assist you to, improve the performance. Lastly, this is, again, next generation AI, where, having a digital assistant. I'm sure all of you, have used Siri or Alexa or Google Assistant or some sort of a, a digital assistant on your phone in some shape or form. And the next generation is digital assistants are coming into the credit department, where the credit, just like how you ask Siri, how is the weather like? You will be able to ask your digital credit assistant, what is the status on this credit application form? What is the, what is the score on this particular form? Can you send this over to, the salesperson? So you will be able to talk and get the information, and, these assistants are going to help you accelerate your everyday activities. So with this, again, we have covered 10 different elements very briefly. We'll be happy to, again, cover each of these areas in a lot more detail at a later point of time, or on, more, detailed sessions. But, these 10 essential elements, primarily cover major activities in the credit process automation. So with that, I would like to pass this over to 𝗵𝗲, and 𝗵𝗲 will share with you a case study of how companies use, these 10 different elements and take themselves to the next level, and what we can learn from this. Over to you, 𝗵𝗲.
Thanks, Vina. I think we'll have to move through these last few slides pretty quickly, so I'll do my best. I wanted to start off with learning from example in digital credit automation. I wanted to give a real-world example to outline typical challenges companies are faced today and how digital credit can impact the organization, their customers, to position both for success. The example today is a large nonprofit medical organization. However, their challenges cross industries and verticals. To give some background and scale for this example, the organization is a billion-dollar nonprofit organization which promotes heart health. They have an e-commerce site which sells online courses, certification programs, and equipment. They have over 400,000 instructors and 80 million healthcare providers and members. So it's not a small organization. This organization understood they had a challenge with onboarding their clients and reviewed their current situation. They had a high volume of credit applications monthly, which were handled manually, wanted to keep pace with digital customer demand, had a need to increase the pace of customer onboarding from weeks to days to improve customer satisfaction and digital experience. And they wanted to improve the scalability of their credit operations to sustain growth. All 5 of these points are challenges for any organization, regardless of industry. Today's challenges are to keep up with the expectations of quick access to information and quick onboarding of customers. Competition in the marketplace is as prevalent as ever, and customers are used to instant approval and orders. So what are some of the implementation details this organization needed to work through? They needed to define their project team, which consisted of business users and end users in the credit department, as well as partner with their technology provider. They utilized the 10 elements of digital credit, which Vina discussed, digital credit templates, signatures, to just name a few. Utilized cloud development within their e-commerce site. For project preparations, they defined the credit application sections, defined validations with trade and bank references, utilized third-party data such as D&B. They defined their credit scoring model and outlined their credit workflow for automated approvals and manual checks and authority control. These steps made implementation very simple, was custom to their business needs, which allowed them to have confidence in the process and in turn create better customer experience. Next slide. The digital credit automation benefits this organization achieved are similar to any other organization, and the results are impactful. Improve the process of credit applications through automation with rules and validations, which reduced onboarding time. Improve customer satisfaction because they could purchase faster. Quicker decisions led to more business and ultimately stronger controls for the credit process. So, starting your credit automation project. Business leaders believe digital transformation will deliver game-changing benefits by embarking upon successful digital strategies. Next slide. Among these benefits include productivity rate, profitability, revenue growth, customer retention, return on investment, and this was something that was reported out by Dell, which encompasses the reason why companies, I think today, as Vina had said, fear that they're lagging behind with their digital transformation projects. Next. So where to begin? The question begins with how to start your credit automation project. Assess your current state and know your challenges, where you're losing productivity, and support your findings with data. Build a business case to show the return on investment and the risks of not having a digital strategy. Work with the business to illustrate current challenges and review the benefits. Understand how much IT involvement may be necessary and bring them in early and partner with the business. As Veena said, there's multiple ways to deploy technologies, and even with SaaS solutions, it's still good to bring them in because there's always concerns about data security. Lastly, find the right digital partner who offers not only the solution, but also provides advice and works alongside you during the process. Understand business drivers in front office transformation. Make the business case justification with other transformation projects. Show how digital credit improves the financial supply chain through e-credit, business, revenue growth, credit operation scalability and standardization, as well as strong credit controls and mitigation of risk. Prepare for digital credit transformation. Understand your current credit processes to create applications, the credit application and scoring templates. Utilize approval workflow in third-party credit bureaus. And the key point amongst all is to automate, analyze, and onboard. The smart automation digital process in summary: transition to an online credit application with digital signatures and digital validations with reference checks. Integrate with third-party reporting bureaus to bring in financial data. Automate credit scoring, decision rules, and approval processes with workflow for standardization and compliance. Ensure your solution utilizes alerts for credit renewals. Automate low and medium risk decisions, allowing for manual touches for high risk and high value decisions. Following these steps will streamline your customer onboarding process and enhance your end customer's experience, making the digital credit transformation a win-win journey. For some questions.
Yes, thank you, Veena and Murray. We're now going to begin answering questions submitted during today's presentation. As a reminder, you can still submit questions through the questions pane in your control panel. Our first question is, where can I find information on digital credit?
Let me take that question, Linda. So again, the audience can find information on digital credit on NACM site, as well as several other sites. We also have on 𝗖𝗵𝗲𝗰𝗲 site, we have a lot of information on digital credit. We have a dedicated site called 𝗔𝗂𝘀𝗀𝗃application.com. You can also find a lot of information on digital credit, right there on that particular site.
Thank you, Veena. We have another question. Can my credit applications that are on paper now be digitized?
I would absolutely say they can.
That's a good question. Yeah.
Go ahead.
Go ahead.
There's tools out there in the marketplace, and I know that we have them that can basically digitally capture paper images and store them for future reference.
Okay, and another question. How can I handle international credit applications?
That's a good question, Linda. Especially global organizations, who are expanding to new markets as well as having national customers. A lot of times the credit application forms are different for different regions. Sometimes they could be in different languages. as well as I think information that they gather in different regions are slightly different. So that becomes a little more complex. And this is where, a good credit solution also has international flavor to it, where, you will be able to, simply, set your digital credit app for different regions right into the system. So, good credit application solution has international, credit applications configurations loaded in that, and certainly, our solution has that, and I'm sure there are solutions out there, that carry that. But digital credit is an excellent way to go, especially when you're doing international business.
Okay, so we'll leave a few minutes for people to type questions in if they have them. A minute or so. Not seeing any questions right now. So if there aren't any other questions, I would like to thank 𝗵𝗲𝗰𝗸 and 𝗵𝗲𝗀𝗀. And thank you to everyone for attending today's webinar.
Thank you, Linda.
Digital Order to Cash, a Roadmap to Credit Automation, Part 1, Onboarding the Customer. Veena and Murray's contact information will be included in the handouts to be emailed to you. Remember, this is Part 1. There is Part 2 and Part 3 coming up in April and in May. If you have any questions about NACM Connect webinars, please contact education@nacmconnect.org. On behalf of NACM Connect and our presenters, thank you for joining us today and have a great rest of your day. Thank you, Veena. Thank you, Murray.
Thank you.
Thank you, Linda. Thank you, NACM, and thank you, audience, for joining us today.